Hello everyone and welcome to Day Trader S&P 500. Today is March 18, 2021. This is Dale Woodson, one of Timer Digest's top-ranked newsletters, and want to let you guys know about our newsletter service. Been around since 1997. We have an annual subscription for $233 a year, monthly subscription for $144 a month. We have daily reports virtually every trading days and sometimes more than once a day. I will be on vacation next week, so I want to cover a lot. Won't do the normal weekly update on Sunday, but I'll try to cover most of it today. And there's a chance I'll be able to do some reports while I'm gone. I'm working on setting that up. I don't want to make any promises I can't keep, but if market conditions warrant, I'll see if I can do a report during the week next week. Okay, let's see. Let's get into this. Thank you guys again for subscribing to the channel. Remember to hit the reminder bell and the like bell and or the like button. And I appreciate all you guys supporting the channel. We've got a lot to cover today. Let's see. I want to get into the S&P. We want to look at bonds. Ethereum, Bitcoin, Tesla, and gold. I want to touch on all of that, okay? What we're looking at here is a 5-minute chart of the S&P from the most recent March 12th low, and we have a 5-wave advance into yesterday's high. Here's the Powell announcement or speech, and there's the market reaction to it. Okay, and we have a 1 up, a 2 down. This is an expanded flat here. I'll get into that for you guys, where we have an A down, a B which goes higher than the start of A, and a C which falls short of the beginning of A. And let's change that to a different degree because it's way, let's make it minuscule. There we go. So wave 2 was, it doesn't really matter if it was an expanded flat or not, because the wave is over. The 5 waves up are over. So we have 1, 2, 3, 4, 5 into that high. So in this line here, I'll explain at 39.81 later. But what we have here is in what the market did from there. So let me scroll this back to today. And as you know, second waves cannot retrace more than 100% of the first wave. So this is a wave. Okay, a completed 5 waves. And this, once it broke right here, right by the end of the day, that low from the 12th, that means it's not correcting that 5-wave advance. And when I say that 5-wave advance, I mean this one from March 12th to this high. It is correcting something more. Okay, we can see we've got a 1, 2, and then a 1, 2, 3, 4. I'll get into that. But let's work our way backwards. We did this before I was on YouTube in January of 2018. The market started moving down. It's like, okay, what's the last 5-wave advance? Is it correcting that? And you go bigger, bigger, and bigger. And we found out it didn't take too long to figure out it was correcting the move up from the 2009 low. And we had a big 2-year expanding triangle from January of 18 to March of 2020. So this is correcting something more than this. Let me see if I can pull this all up here. I think we can get to the March 4th is the next 5-wave advance of 1 higher degree. Okay, so this 5-wave advance has been more than 100% retraced, so it's not a retracement, it's a retracement of something more. So we can look at this 5-wave advance, and that is the March low. We have a 1 up, a 2 down, 3 up, a 4 down, and a 5 up. And by the way, that's why this line is here. 5 equals 1 from this March 4 low at 39.81. And the high was 39, I believe it was 83 and some change. So we're asking ourselves right now, that long-standing 39.96 target, is it going to hit it, or did it fall just, what was it, 12 point something points away, which was less than 0.1% as far as accuracy goes. So it came close, but this is the first clue that maybe the top is in, or probably the top is in, okay? Because we're correcting more than that. If we just correct this, then it could go up to 39.96 or that 4100 number we had. But let's do a retracement of this. Okay, from the March lows, I'll get this again as close as I can, and we'll get that on that, I believe it was 87 right there. Okay, you can see our retracement targets for this advance are 38.84, 38.53, and 38.23. If it hits one of these and goes up, then we're going higher to new highs, 39.96 or possibly 4100. But we'll know because this will unfold fast, just like it did in 2018. It didn't take long to figure out that this was a huge correction. And like I said, it was from the 2009 low. So that's what we're looking at there. I want to look at a little bigger picture, I believe, here. Let's see. Oh, yeah. So there is that fourth wave low from March 4 right here. There's our retracements. We already know the market's retracing more than this from the March 12th wave. We work our way back from the fourth waves. That low. So we'll see if it's this low. But let's cover one more. Let's just say it is from this fourth wave of intermediate degree, that October 30th low. And then we have a 1, 2, 3, 4, 5. And again, I want to make note of that number 2 at 39.82. It's amazing where these things are coming up. Okay, so that looks like a horrible fifth wave. It may not be done, but we'll see. Let's see what the retracement is just in case. It is retracing that, which is one higher degree than the March 4th. Okay, and you can see our retracements there are 36.96, 36.07, and I believe that's 35.19 or 20 right in there. Okay, so we'll see if it's retracing that or not, and we'll know relatively early because these waves will be big. Okay, we'll see how that works out on there. Okay, I wanted to let you know about this number here because if you look at, let's get back here, I'll scroll back to the beginning of this back in March to give you guys a better picture. I want to show you all the different possibilities, okay, and this is definitely a bullish longer term possibility. Let me wipe out these retracements here, okay, and remove that. Okay, so here's the March lows. Here's one up. Here's two down. 3 gained equality with 1 here. And then we have a flat 4 into that October 30th low. And then we have 1, 2, 3, 4, 5. It's not quite a truncated fifth because it went above the third wave. But if you'll notice, the 1.618 multiple of 1 is right there where we just topped at the 39.87, I believe it was, or 83, whatever that was. Yeah, 83. So this could be 3. Let me just show you guys what it could be. If 3 is a 1.618 of 1, it is there. Okay, and then we'll get a retrace. We'll get a fourth wave to retrace all of this. That is the bullish scenario. Let me get this 3 over here, and we'll deal with that once we see where this is going. Okay, here's where 3 equals 1. Here's where 3 is 1.618 of 1. Then we get a long sideways 4, probably into this area, and then a 5 higher up. Okay, so wanted to point that out to you guys. Let's see, and that's it on that. So yeah, this is going to be very exciting to see how this plays out as far as what degree of trend it is. But I think I had those marked out here. I think I got a review here for you guys. And it should be this one here. Yeah, the last 5 waves up. Here we got that expanded flat. There's the March 12th low. We know it's more than the March, the March 4th low here because it retraced more than it right here. So we've got a 1, 2, 3, 4, and a 5. 4 high, 4 low. Holds above the wave 1 high, and here we've got a developing decline. We have a 1, 2. You can see 3 is very strong, and you can see 3 subdivides into 1, 2, 3, 4, 5. So that would be 3. Here's our wave 4 targets for retracement up before 5 down. Okay, we'll see how that plays out. That could play out should play out tomorrow unless this third wave is extending. And if it's a large decline, it will extend even more. Like I said, third waves can take on any Fibonacci extension of the first wave that they choose. In fact, let me look at that just to see where those are. Okay, we're gonna get a little bit tighter, a lot tighter actually in here. Okay, if you guys can stand it. Let's see here. Okay, let me get the extensions on this and just see what this third wave has done or can do as far as extensions go. And I think I got them all in there. Yeah, there's the 1-to-1. It passed it. There's the 1618. So let me just say that this picture back here where we said we should get that retracement up, well, this third wave might not be done yet, okay? It can get a 1618 at 3903, a 2618 at 3862, and I'll put this in there because we've seen them, a 3618 just above 3820. It looks like 3822. Okay, so we'll have to watch that unfold, and depending on the degree of correction, what degree of trend it is correcting, we'll know by the size of this third wave. Okay, I want to get into bonds, and I'm going to go places where a lot of people probably don't go, and if you've only been investing or trading in the last 10 or 20 years, you probably don't know what bonds are or that you could invest in them. But this is a long-term chart of the 30-year T-bond futures. You can see we had a 1 up, a 2 down, a 3 up, 4 holds above the wave 1 high, and then we've got 5. And then that was a big spike, and we're looking back again in March of last year. Everything turned in March of last year, including interest rates, including the bond market. Okay, this is, I've got another chart. It's a 39-year bull market in bond prices and bear market in yields or interest rates, and it appears to have ended. It's a huge huge move. Okay, let me show you guys. Let's see, do I have the inverse here? Yeah, and here's the here is from the March highs, or lows in yield and highs in prices. You can see the huge move down there. Okay, I got a couple other charts I want to show you guys. I showed this one day last week. Here is the 30-year Treasury yield just from March, and you can see it went up from 1% up well over 2%, but that's a 200+% rise in a year from March to March. That is a huge move, especially especially in the bond market. Okay, I wanted to show you guys another chart here with the bonds. Here is that same long-term 30-year Treasury bond yield. You can see in the 80s when it was up in the teens, and here's the March lows. Okay, that is a 39-year bear market, and I think I may have one more here. Let me see. Is it this one here? Okay, here's the 30-year Treasury with a monthly bar. There is a high back in 1981, and I'm old enough to remember, buying my first home in the early 80s when interest rates were in the teens, 13, 15%, and companies back then just started offering 401ks to invest in the stock market, which was a scary proposition back then. Okay, you can see here a 94% drop from 15.2 to 1% from 1981 to 2021, and there's your 40-year, 39-year bear market in interest rates. But I wanted to touch base on that, what we were looking at back then. I'm old enough to remember this stuff, and I think I have it. Do I have it here? Yes, I do. This is a weekly bar chart of the S&P, okay, and this is 1965, 1966, and you can see from 1966, look at that dotted line and follow it all the way across where it shows 95, 89, all the way to 1980. That's 14 years. The market went sideways. You could call the end in 1982, or you could call the end in 1974, but this was a 16-year bear market. And then back in the late 80s, introducing stocks, people were afraid to buy stocks. Bonds were safer. Bonds were yielding all this interest, and a 60-40 portfolio of stocks to bonds was a scary proposition back then. I remember because I was working and they offered us 401s, and a lot of people didn't even get in them. They were like, no, stock market's too risky. We don't want to be in the market. That's what a 16-year bear market will do to you, okay? I'm not saying we're getting in a 16-year bear market, but if this top is in, we should at least see a 2-year bear, just like 2000 to 2002 and 2007 to 2009. Okay, so bonds are a big deal, and those people who don't know about them are going to find out the hard way that interest rates matter. They're going up at an astronomical rate. 1 to 2% is not a big deal, but the time here and the speed. And basically, our Fed said yesterday he's not going to do anything about the long-term rates. He can't. And like I said, he can't anyway. They're not in charge. The bond traders are in charge. I can't tell you how many articles I've written over the last few decades how the traders in the pits at Chicago, if they even have them anymore, they're the ones who set the interest rates. And I've shown so many reports and charts where the Fed just follows. They don't lead. The traders lead and set the rates, and the Fed follows. Okay, enough about that. I want to get into Ethereum, Bitcoin, and Tesla and gold. Here's Ethereum. It looks like it, like everything else, starts from the March lows. You can see a 1 up, a 2 down, and 3 is a 2.618 right here at this high in January. And then I want to label that for you guys and then do some more stuff, some more Elliott waves and Fibonacci's here. So we have a 1 here, a 2 here, a 3 here, a 4 here, and I'm going to throw 5 up there just in the distance because I don't know where that's going to go. I want to break that apart. Here, let's see how 5 relates to wave 1. All right, Fibonacci wise, that would be the end of 4 there. That's 3 and a 4, and then we've got a 1, 2, 3. It may not be over yet. So 1, 2. There's 1. There's 2. There's 3. There's 4. We're going to get another wave up in Ethereum. Okay, I want to break that apart even more. So let's go from that wave 4 low. Let's get into an hourly chart off of that wave 4 low. See where we're going here. There it is. Let me move it like this and like that. There we go. I'm going to throw the 5 up. Heck, it may end up going there, right? Okay, so from there, 1, 2, 3, 4, 5. That's a 5 there. Okay, that's a 1. Okay, let's look at that for Fibonacci extensions. Okay, there's 1. There's 2. Let me get rid of the other line so it's not confusing. Remove. There's 1. There's 2. Boy, that could be. That's probably 3 there and 4 down, right at the 1 high, and then we get a 5. Okay, so let me mark that for you guys here real quick. Let's get a 5 wave advance. There's a 1. There's a 2. There's a 3. There's a triangle 4. Yeah, that's definitely it. And then, all right, we've got 5 up there. Okay, so let's make that 1 lesser degree so we don't get confused on which is which. Okay, we look at that nice triangle there and then a shoot out of it, how it thrusts up higher like Elliott says. Let me move that 3 down there. Okay, so that's 1, 2, 3. There's 4. How is this 5 going to relate to that 4 at the edge of the triangle there? And 2281 looks like a nice target for 5 of 5. Okay, there we go. We'll put that up there and that up there. So that's what we're looking at. You can see that's a nice A, B, C, D, E. Nice contracting triangle. Okay, that's Ethereum. Very nice how that worked out. I didn't know how that was going to work out. I hadn't looked at it yet. Let's look at Bitcoin. We still have our old chart analysis from the last time we did it. We didn't do it too long ago. There's 1 and 2. There's 3. There's 4. 5 is, wow, a 3.618 and possibly a 4 multiple of 1. Okay, so 1, 2, 3, 4, 5. That could be 1, 2, 3. Let's tear that apart from that 4th wave low on an hourly basis and see what we have there. Bear with me while I bring all this together. Make it a little bit tighter. There we go. There is that fourth. Let's expand that out a little bit. Bring it over here. There we go. 1, 2, 3, 4, 5. And that looks like 1, 2, 3, 4, 5. That could be over right there unless that wants to extend. Okay. 3 looks good there. Okay. Let's see how this looks internally. I'm going to get rid of all these other marks here and see how this plays out. That 4 is a little tight. Get down there. There you go. No, they're all a little tight. Let's see here. Let me look at this internal wave count from here. And we have 1 up there. Let's see where 4 and 5 go. That's off a little bit. We can throw it right there. That's a 1618. There's a chance that's in, but we'll have to let that. Well, we got a chance to go to 67,869 in Bitcoin if this decides to go any further. We'll have to look at these declines and see how this plays out, and that looks like that move up is a little bit more than it should be if it's a move to the downside. We can look at that real close and just see our Fibonacci retracements and what that would be. Yeah, it's more than a 618. It can't be 100. Let's look at let's see if we can add in here. I'll just leave it at that. That's here. Let's throw a 786 and see if it's there. Yeah, it's right at the 786. So we're going to have to watch this decline. It appears to be 5 waves. It could be a 535 and be done. Obviously, watch this wave 4 low. Chance to go up to 67,689. Okay, moving on to Tesla. We're looking at an hourly chart. There's 5 waves down to here, and this first one was an initial triangle, okay, overlapping, a beginning triangle, and then we had to here we had a perfect 50% retracement in wave 2 or B, and then the price action from here is really interesting. Obviously, if you're a bull, you need it to get above this 618. The bearish case, it needs to come down. It started to come down today, but I'm going to look at, and we have an ABC correction here. This is perfect. But if this is C or 3, it needs to start exploding to the downside. Okay, let me look at things from this March 10 high, which I believe I have over there. That is the March 10 high. You can see we have a down, up, and then we have a 1, 2, 3, 4, 5. Okay, and then we have a correction up, and it looks like we're starting another 5 down. Okay, now we're at the make or break point. Unlike the S&P that broke the previous low, and this one's just the other day, but if this breaks through this low, then we're looking at 5, then 3, then 5. You can see 3 up there. So let me get an extension of that to see if it can break it. Okay, and that's going to be key for the bears for that low to be taken out. And we'll get pretty close there. We're looking at this low right at, let me get rid of this so it's not in the way. Okay, we had it out of the way. They're just doing futures. Okay, that low is right around 652. Okay, so we have 5 down. We have a correction up, and if we're going to get another 5 down, it should go to at least 640. The 1.618 of this is 602 for this internal wave right here. Okay, so Tesla's at a critical spot. All right, so we'll see what happens. This high breaks, and then we're looking at the all-time high. And I wanted to point out on Tesla, and I'll come back to gold. I don't know if I can get that wider shot, but that is a 382 retracement of that entire move up all the way going back. I want to get into the weeds with that, but yeah, you can see we're retracing a lot more than this 5-wave advance. Well, let's just see how we're doing on this 5 advance while we have it here. Let's do a retracement of that, and I think it's much bigger than that, but we'll see. We'll let the Fibonacci tell us. And here we have the 786 down here, and it went past the 618. Okay, so that'll need to get taken out, and then that'll need to get taken out, and there's our bull scenario. Need to get a move above there, and then obviously above the all-time highs. Want to look at gold real quick, just to touch base. Gold is still doing what it's doing. It's still looking for a retracement. I still think this is not impulsive, meaning the main trend is still up. This is an ABC correction. Ideally, C equals A at 1644, and we have a 1.618 relationship at 1448. Do expect that once this three-wave correction is complete, that gold will move to new all-time highs above 2075. So that's where we are. That's what we're looking at. We'll look at this decline from the March 18 highs, and was that high it, or is there a chance to get to the ideal Fibonacci target of 39.96? It looks like that may have been in. We'll have to see how it plays out over the next few days. Okay, until then, take care, everyone.